Hi guys, welcome back to my channel. In today's video, we're going to go through the top 5 mistakes to avoid as a trader. Now, over the past 3 years, I've probably made every single trading mistake in the book. However, the whole point of it is to be able to learn from those mistakes and use them as stepping stones to further yourself in your trading journey. That being said, the ones that I'm going to go over are probably the most common ones that I see among some of my students and the ones that I made the most of as well. Now, I do want to let you guys know, don't forget to check the description box below for all the details in this video, as well as ways to contact me if you guys have any questions or concerns. Now, the first mistake that I have on my list is skipping the learning curve. This is extremely important, and I think a lot of people fail to understand why it's so important. I see this mistake being made so much recently, especially amongst newer traders. Trading has been gaining more and more hype, and it's been becoming a lot easier for people to be able to start trading. Now, amongst these newer traders and even some experienced traders, I have seen that people avoid the learning process. They think that they can just jump into trading with little to no knowledge and expect to have big gains or expect to, see what they see on social media, which is not how it works. Those people that you see making big gains on social media, they didn't skip the learning curve. They took the time, they learned the basics, and then they moved on to more advanced strategies. That being said, do not skip the learning curve. There are so many materials out there. There's so many videos. There's so many books that I'll list down below in the description as well that have helped me, that have helped other traders. Please don't skip the learning curve, because in the short term, you may be a little bit successful, but in the long run, as the market continues to change, you're not going to be able to adapt because you don't even understand the basics of trading, the basics of options, the basics of whatever you're doing. You don't understand that. And that is going to become a bigger issue later down the road as you gain more experience as a trader. So don't skip it in the beginning. Give yourself, everyone gets through the learning curve at a different time. It took me almost a year to get over it. Some people get over it over a month, in a couple weeks. It really depends. Give yourself a full month of just learning, of just trying to understand the material, trying to understand technicals, price action, whatever the case may be. Trying to understand the different strategies of trading, whether you want to be a day trader, a swing trader, a long-term investor. You should understand all of that prior to throwing yourself to the wolves, because that's literally what you're doing when you don't let yourself go through that learning curve. Like I said, there's a ton of learning material out there on the internet. There's tons of books that you could potentially read. I'll list everything down below that was helpful to me. But guys, I'm telling you, this is probably the most important part of your trading journey is the learning curve. You need to give yourself time to learn the market, to learn what the market is all about, and then you jump into trading. Don't just blindly throw your money into the market, because I guarantee you, you'll end up losing money, and then you'll be one of those people that just like, I hate trading, trading is gambling, when in reality, you really didn't give it a chance and you really didn't start where everyone else starts to become a successful trader. Mistake number 2 is not having a trading plan. I cannot emphasize the importance of this. I see a lot of traders, and I can't even tell you how many times I see this, that get into a trade, that execute on a trade and have no idea when to exit this trade. They have no exit plan on this trade. This is such an important point, and I cannot begin to tell you guys how many times I've seen people execute on a trade without knowing when they're going to exit that trade for either a profit or a loss. This is going to affect you heavily in your trading, because you're going to take bigger losses, because you're not going to know when to cut your losses, and you're not going to be able to optimize your profits because you don't have a target point of when you're going to lock in your profits, and then you end up getting greedy on that trade. That being said, when you don't have a set exit strategy for any trade that you execute on, one of two things can happen. One, you're in a profit on a trade that you executed on. You don't know when to exit to lock in that profit. You either end up getting greedy and the stock reverses, you end up giving if not all of your profit back, or you're in a loss on it. The second thing that could happen is that if you don't have an exit strategy, if the stock doesn't go your way, for example, you're in calls and the stock pushes down. Now you don't know when to exit that trade for a loss. You don't know when to cut your losses on that trade because you didn't have a trading plan, you didn't have a trading strategy, you didn't have an exit plan, and you don't know what to do. Now what happens mentally as a trader, your back is against the wall and you end up bag holding a trade that should have been a scalp into a day trade or into a swing trade, whatever the case may be. Now, this is why having a trading plan is so important, because you avoid taking that 70%, 80% hit when you could have cut your losses at 5 or 10% and been okay. So what goes into a trading plan? You need to ask yourself a few questions prior to executing on any trade. First, the first question should be whether you're scalping, day trading, or swing trading this whatever trade that you're looking to take. What is your plan on it? Are you scalping it, swinging it, day trading it? What is it? You need to have that set prior to entering the trade. The second point is, where are you going to enter the trade? At what level, at what point are you going to enter this trade? That being said, you shouldn't hesitate once that level is hit. That is another mistake that I see being made. People hesitate on their trading plan. You need to follow your trading plan all the way through. Now, once you have your entry point set, you need to ask yourself, what do I want to see on my indicators or level 2 or time and sales or whatever you utilize? What do I want to see as the stock is approaching this level? After that, you need to know when you're going to exit that trade. Either when you're going to exit it for a profit if the stock ends up going your direction, or when are you going to exit it if you potentially take a loss? When are you going to cut your losses on that trade? If you do not have a set exit strategy, I promise you, you are going to really struggle as a trader. Now, don't be afraid to cut your losses. Losses occur as a trader. It's okay, especially if you followed your trading plan. That is way better than if you were to take a 70 to 80% loss versus a 5 to 10% loss. Risk management is in place at that 5 to 10% loss, whereas the 70 to 80% loss is you emotionally trading and you bag holding. So don't be afraid to cut your losses. Follow your trading plan all the way through from entry to exit point. If you have a trading plan, make sure you follow it. That is another mistake I see being made amongst this, is that people have a trading plan, but they don't follow it all the way through. That is another issue. You need to make sure that you're following from entry to exit point in your trading plan, and you need to make sure that every trade you execute on, you have a plan for that trade. Now, the third mistake is probably the most common mistake I see and the one that I made the most of: over trading. Now, I cannot tell you how many times I've seen people do this. Over trading can be extremely hard to kind of avoid, especially if you don't have any control of your emotions. I think being able to control your emotions is just a huge part of trading in general, but especially when it comes to over trading, you need to be able to be disciplined. Tell yourself when you're walking away, that's it, you're done. Nothing should be able to pull you back. Some tips to avoid over trading is: 1, open a cash account. I think a cash account is the best way to avoid over trading, just because you're limited to the amount in your account. You're limited to the cash in your account until it settles the next day. This being said, because you're limited to the amount of cash in your account, you're going to be a lot more selective with your trades. You're not going to take willy-nilly trades here and there. You're going to really follow your trading setup, and you're going to find the highest probability trades you could potentially take, therefore increasing your chances of being profitable on the day. Another tip to avoid over trading is to set trading time. So what I mean by that is set a specific time of the day or times of the day where you want to trade. For example, for me, I usually like to trade the first 2 hours of the day and the last 2 hours of the day. If I make profit on the first 2 hours of the day, if I'm good, if I got a good couple of solid trades, I won't trade the end of the day. That's just me personally. That keeps me disciplined, and also mentally, I'm not as exhausted by sitting in front of the market all day looking for opportunities. If you don't see anything and your set trading hours are in the morning, don't trade for the rest of the day. You should be disciplined enough to not trade for the rest of the day. You told yourself that you were going to only trade the first 2 hours, only trade the first 2 hours. Now, this doesn't mean force yourself to find trades in those first 2 hours. This is going to discipline you to be able to still find the highest probability setups in only 2 hours of trading. So set specific time frames to where you want to watch the market. This will help avoid over trading in the long run. Fourth mistake that I see being made a lot is sizing up too fast. Too often I see people going from 1 contract to 10 contracts to 15 contracts without understanding risk tolerance and risk management. Risk tolerance is extremely important in the market. You need to understand what your risk tolerance is at. Like I said previously, there's a lot of hype on social media amongst traders and pushing big numbers and this and that. What you need to really understand is that those traders didn't just start with 10 contracts or 15 contracts or 20 contracts. They worked their way up. They gained experience in the market before they just jumped in with 10 or 20 contracts. You need to understand your risk tolerance and how much you're willing to lose before you just size up out of nowhere. So some tips and how I recommend if you want to start sizing up on trades is, one, understand your emotional and kind of mental risk tolerance and what you're willing to lose and what you will be okay with losing. You need to ask yourself with any trade that you take, if you're looking to size up, you need to ask yourself, am I willing to lose X amount on this trade? If the answer is no to that question, you don't need to be sizing up like that, okay? You need to ask yourself that question every single trade you take, especially if you're looking to size up, because that is going to determine your risk tolerance. Because if you end up sizing up and you take a hefty loss and mentally you weren't prepared for that loss, in the long run, it's going to mess you up and it's going to be a quick way to lose your account, lose most of the capital in your account. I know because I've done it. How I sized up is, one, I recommend to figure out where you are emotionally and mentally in your trading journey. Are you emotionally ready to size up and put on more risk or not? Because trading with one contract requires a different set of emotions versus trading with 10 contracts or 20 contracts. Each time you size up, it requires you to have more discipline and have more emotional control, because you are putting up more risk that you're not used to and that it's new to you. It's obviously going to be a different set of emotions. So you need to make sure that you're emotionally and mentally prepared to put up that risk prior to actually sizing up. How I sized up is every week or every 2 or 3 weeks where I was consistently profitable, I would then add 1 to 2 or 3 contract sizes depending on how many weeks it was. So if it was like 2 weeks or 3 weeks where I was consistently profitable, I'll add a contract or 2 contracts or 3 contracts. Not 10 contracts or 20 contracts, 1 or 2, until you gradually work your way up to that 10 or 20 contracts, wherever you want to be as your account size grows as well. But make sure that you are consistently profitable throughout those weeks, meaning that you shouldn't really be having any red days at all. And if you do, you should not be sizing up. So if you are having red days amongst those couple of weeks or month or 2 months or however long you want to do it, make sure that you are not having any red days, you're consistently profitable, you're consistently following your rules, you're disciplined. That way you can handle more risk. So the 5th and final mistake that I have to go over with you guys is not taking a break after a loss. I used to do this a lot, and not just after a loss, honestly, it's taking a break in general from trading. I used to do this a lot. I would never take a break. I would just continue to trade back to back to back, also because of social media and just posting and this and that. And you guys see from the outside, you see the glitz, the glamour, you see the nice cars, you see the designer, you see this and this, you see the big numbers being put up, but you don't see the other side of trading that people don't talk about, the mental exhaustion, the avoidance of all personal relationships. Sometimes there comes a time where you're so exhausted that you don't want to talk to anyone. You take a loss, you don't want to deal with anyone, and it can have a strain on your relationships if you don't know how to handle it. That being said, I always recommend, even if you're consistently profitable, I do think it's always healthy to take a break from trading just to regroup and, you know, kind of get back into the normal before you get back into trading. And even when you're consistently profitable, it's still stressful because you're putting up numbers, you're taking on risk. If you're taking losses, I always recommend do not go more than 2 days taking losses and continue to trade. If you hit that 2-day mark, it's your 2nd day and you've taken another loss, take a break. However many days you think you need, take your time. The market is not going there. It has been here for so many years. It will continue to be here. You're not going to miss out on anything. And to all my traders out there that are new or experienced, don't allow yourself to get sucked into the negative side of trading, because like I said, it is extremely stressful and mentally exhausting to put up risk every single day to be able to make an income. So I get it, I understand, but make sure that you are consistently taking breaks throughout your trading journey. You're consistently taking some time off, spending it with your family, spending it doing something else you love. Whatever the case may be, you need to regroup, kind of find a zen area before you get back into your trading routine. All right, guys, so that's it for this video. Thank you so much for watching. If you have any questions, go ahead and comment down below. I will link some resources in the description box as well. Don't forget to like and subscribe to my channel, and I will see you guys in the next video. Bye.